So if you're not living under a rock, you've probably heard of these things called stocks. But what really are they? Well, let's say that we have a cake. This cake is actually a company. Well, what you could do is that you could slice this cake, into many parts. And now, based on how many slices you make, that's how many fractions you're gonna have. So let's say that each of these slices is the same, and one slice is 100 of the entire cake. Well, in this case, the whole company, or 100 out of 100, would be the whole company. So the company is divided into 100 parts, and therefore 100 shares. And by owning a single share, you own 1% of the company, which is one share. But why do people want the shares? Well, there's two main reasons. First of all, if a company is successful, it can grow from this cake to potentially this cake. So the company is gonna grow, it's gonna make larger profit, it's gonna get larger, and basically your 100 or your 1% would be larger, and therefore it will be more valuable. So you can make a profit of selling it in the future. Obviously, the opposite can happen as well. If the company goes bankrupt or it just gets weaker, the cake can be eaten as a whole, or it can get smaller. In this case, we'd have a loss. But cakes and companies have a difference. Cakes can't really produce profits, however companies can. So when an established big companies have a lot of cash and they don't know what to do with them, they can give you a fraction of the profit as a dividend. Which is another way how you can make money off of holding shares. So to sum it up, a stock is a small piece of a business or a cake. Stock, or part of the cake, gives you an ownership. By doing so, you can be entitled to future profits, and if you're holding a stock, the company can also give you some of its profits as a reward for holding the stock. You will get a dividend. And that's what stocks and shares are.